Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
Well, we're going to continue with AI because shares of Nvidia and AMD just surging. Nvidia up 4%, as is AMD. AMD, up 6.3% now. This after the company's plan to resume sales of some AI chips in China after securing Washington's assurances that such shipments would get approved. It's a dramatic reversal from the Trump administration's earlier stance on measures designed to limit Beijing's AI ambitions. Ian King is Bloomberg News U.S. semiconductor and networking reporter. He joins us from our Bloomberg newsroom and bureau in San Francisco. Ian, what is this reversal? The news crossing late last night, obviously good for shareholders who are long these companies. What was the reversal?
Yeah, I mean, in a broader sense, the trend for these companies has been sort of bad to worse, which means, access to their largest potential market, China, has been becoming tighter and tighter, and it's becoming more difficult for them to do business. What they were told was, and this is the U.S. Commerce Department, was actually, look, these licenses, these applications that you've put in for permission to ship some of these chips to China, guess what? We're going to take a positive look at them. So this was really kind of a pleasant surprise if you're a shareholder, where the expectation has been that this situation was going to get worse and worse.
A pleasant surprise and somewhat of an about face, right, when it comes to the presidential administration's policies here. What does this about face really signal about the negotiations going on between China and the U.S. when it comes to semis?
Yeah, I mean, I think you nailed it in terms of negotiations, because as we've seen from senior administration officials who've been on our TV and been on other media sort of talking about this issue today, they've said, oh yeah, we sort of made this deal a while ago when we were asking the Chinese to give us access to rare earth minerals and magnets, and we sort of told them that this might be a thing. So what we're kind of learning here is it's clearly a quid pro quo type situation, and obviously implies that going forward, if we're going to see more of these trade type deals, then perhaps AI exports to China are on the table in a way that we thought they perhaps weren't.
At issue are these H20 chips. You mentioned different officials on our air. One of those officials, Treasury Secretary Scott Bessent, he was on Bloomberg Surveillance a little earlier today. Here's what he said about those Nvidia H20 chips.
Be a judgment that the Chinese indigenous manufacturers already have an equivalent chip. So if there's an equivalent chip, then the Nvidia H20 could be sold. One thing that we do not want is a digital Belt and Road springing up around the world because other countries or China are substituting for our American chip manufacturers.
That was Treasury Secretary Scott Bessent on Bloomberg Surveillance earlier. I'll repeat a little bit of what he said. He does not want a digital Belt and Road springing up around the world. That, of course, referring to what China's been able to do physically around the world when it comes to trade, when it comes to ports, when it comes to building roads throughout the entire world, or almost the entire world, much of the developing world, I should say, and exerting its own influence on countries around the world that way. Is there already a digital Belt and Road initiative that China has been exerting on the rest of the world, Ian?
In this particular area, in AI, not yet. But what Jensen Huang, the CEO of Nvidia, has argued, and some of his peers have argued, is like, look, if you don't let the US technology become the absolute center, the base layer of this giant AI build out around the world, somebody else will. Who will that somebody be? Most likely China. Right now, they're not as good as we are. Right now, they're way behind us. But guess what? If you give them the chance, they'll catch us up. That's been the kind of, hey, you need to let us be out there and propagate our AI kind of argument that they've made. And this is clearly something that we've seen administration officials kind of parrot or adopt, if you like, in terms of their explanation of why they're going to let Nvidia and AMD sort of play in China to a greater extent than we thought they would.
I'm wondering how this development, well, I guess what it means for U.S. tech and AI companies now versus companies, I'm thinking DeepSeek in China, that are also trying to kind of get ahead in the AI arms race. Does this level the playing field?
No, it doesn't. I mean, you know, it's still a very distorted, if you like, situation. U.S. companies are not going to be allowed to sort of absolute free access. You know, the U.S. administration officials were very clear to point out that, hey, we're only letting them have these access to these older chips, right? That nothing new, nothing state-of-the-art is going to be allowed there. So those Chinese companies that are actually developing, they will have access to some, perhaps, U.S. technology, but nothing state-of-the-art. So they've kind of got to make their own way still, and that's obviously a hard road.
How are they doing in that?
It depends who you speak to. Those that want to argue for more freedom, that want to argue that the U.S. is at risk, are saying the Chinese are finding a way. Huawei's doing really well. DeepSeek is doing really well, and they're making do and mend with very little. So guess what? If they, over time, they're going to get better. Others are saying, no, they're way behind us here. This is our chance to really hold them back, and the U.S. is forging ahead. So, you know, the argument tends to shift according to who's making it and what the motivations are. What the reality is will be determined by the market and the use of these systems worldwide.
Ian, just 10 seconds on sort of the next question when it comes to what Nvidia and AMD and the like cannot still export. What is it?
Yeah, I mean, the next question is how many of these licenses are they going to get, and what does that mean materially for them? And the answer is we don't really know yet how quickly these licenses will come, how quickly they'll be able to ship, and how much demand there'll be, whether it'll restore the lost revenue that they've already had to point to.
Well, there's certainly demand for shares of these companies today. Nvidia up 4%, AMD up 6.4%. Ian King, Bloomberg News, U.S. Semiconductor and Networking reporter. Always love it when you join us on Bloomberg Businessweek Daily.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
So that's a look at three of the big banks, which we're interested in not just for their results, but also for their macro commentary. Jayati Bardwaj is also watching this commentary closely. She's director in FX and EM strategy at TD Security. She joins us here in the Bloomberg Businessweek studio. I want to shift gears a little bit and talk capital flows, because that's certainly under your purview. In this new tariff regime, we've got a great story on the Bloomberg about the maker of Kerrygold butter, a favorite of pretty much everybody, has slowed its U.S. investment as it waits for more clarity on President Trump's trade settlement with the EU. Just about an hour ago, we heard from Embraer's CEO. He said he may revisit its business plan due to U.S. tariffs. It's an evolving situation, certainly, but how do you see tariffs changing the flow of capital, big picture?
I think the biggest thing is that they have injected a lot of uncertainty into markets. And I think last week was that wake-up call, because markets had become a little too sanguine on tariff risks, and we came back with multiple letters, and that uncertainty crept back up, and that's why the dollar is getting the bounce that we're seeing. You're also seeing the change in capital allocation, which you rightly mentioned. The biggest mover and the first mover actually has been Europe, because they have been very quick to repatriate, and they've been very quick to, bring money back home into local equities, which is actually what's boosting the currency at this point.
I want to jump in, because as I was asking you that question, we got a red headline crossing the Bloomberg terminal. The president says that Indonesia will buy 50 Boeing jets in a trade deal. How do you look at a U.S. manufacturer, a massive U.S. manufacturer, as a bargaining chip when it comes to these negotiations?
The thing is, we've seen with Trump is that we've seen a lot of frameworks or skeletons of a trade deal. But right now, we're still figuring out a lot of the specifics. Even with the UK, we don't know what the specifics are. That's why markets are in a very uncertain mode. That's why you've not seen markets rally on all of these trade deals the way you would expect otherwise. There's still a lot of uncertainty, especially to the degree that tariffs are being used as leverage to extract a lot of concessions from the rest of the world. The one interesting headline which came out a few days ago is that the European Union is now talking to its other non-US trading partners to come up with a joint trading alliance and take a stronger stance to the US. I think those are also the things which are interesting, because while the US is a very strong dominant power in the geopolitical space, it is actually forcing the rest of the countries to step up and do a lot more fiscal spending and also a lot more trade amongst themselves.
Let's zoom out and talk about how all of that impacts the direction of the dollar. We've seen a lot of weakness this year when it comes to the dollar. What do you see the catalysts next, at least for the direction of dollar strength right now?
I would say that in the very short term, I think there's going to be a tug of war between just short-term technicals, which tell you that the dollar is very cheap from any historical standpoint, which is why you will see some times when the dollar is trying to bounce back higher. But structurally, I think this is as convincing a time to sell the dollar for more structural reasons than you would have received. For the longest time, everyone would tell you that the dollar is overvalued, but you could never come up with good enough reasons or catalysts for that dollar, weakness to sustain. But after a very long time, I can now come up with a lot of reasons for why the dollar, weakness will sustain unidirectionally in the remainder of the year. The capital allocation, that's definitely one which we've seen in Europe. It remains to be seen if other countries follow. But another very interesting bit is that the global investors of the world have been overweight US equities, but they were actually doing that unhedged. They were not hedging their currency risk at all, because the dollar would rally and give their portfolio a boost. But that's changing, and that's why the dollar is structurally seeing that pressure downwards.
What about the Fed here? If we only get one cut this year, does that change the calculus of just how much we see the dollar weaken for the rest of the year?
Not a whole lot, because actually what's interesting is that the correlation between US rates and the dollar has actually been broken. The correlation between the US dollar and a lot of factors are broken. You would see yields have backed up, commodity prices have backed up, equities have backed up, but the dollar is the only asset class unidirectionally heading lower. So that correlation, which you rightly pointed out, would have been very strong at one point. It does not matter anymore, because the structural factors at play are proving to be stronger, a lot more than this correlation to rates.
JT, what happens to the value of the dollar if Fed Chair Powell is somehow ousted?
It is definitely a question we've been discussing a lot, and it's definitely topical with all the headlines. There are a lot of questions around the legality of all of this, but it definitely is. The more conversation we're having about this, the more I think it's edging dollar into emerging market playbook. It's daily from
the president.
Yes, I think it will definitely be injecting a lot of risk premium into markets, and I think even Besant and Trump are careful about that. That's why whenever they're asked, straight up, are you going to fire Powell? Till date, they've said no, because they know that the minute that answer shifts to yes, markets will, price in, Treasury is going to sell off, and the dollar is also going to massively sell off.
So is the dollar a bigger guardrail, or is our Treasuries a bigger guardrail?
Treasuries are a bigger guardrail, because till date, we've not seen any active signs of investors selling Treasuries. So that has still been intact, with Treasuries being the global safe haven of the world. The dollar correlation is already, it's scraping away already. So I think Treasuries is still the more intact one, which I think you need to preserve. And I think that's why Besant and Trump have been very guarded in their comments about Powell today.
JT Bardwaj, always good to see you. Thanks for joining us on Bloomberg Businessweek Daily, Director in FX and EM Strategy over at TD Securities.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, he wanted to become an investment banker, but after arriving at the University of Pennsylvania's Wharton School in 2007, he realized he was lousy at accounting and detested Excel. So he settled on startups. He eventually found himself in the direct-to-consumer healthcare business. We're talking about Andrew Dudum, CEO of the telehealth company Hims & Hers, which for more than a year has been selling GLP-1s, America's most coveted weight loss drugs. I'm reading from a story in the forthcoming issue of Bloomberg Businessweek magazine. It's the August issue, but you can read the story now on Bloomberg.com and on the Bloomberg terminal. Madison Muller and Devin Leonard wrote the story. We've got Madison Muller with us right now. She's Bloomberg News health reporter, and she joins us here in the Bloomberg Interactive Brokers studio. I think a lot of people are familiar. Well, I would say there are two different types of people who are familiar, maybe three, with Hims & Hers. there's the investing audience who followed the ups and downs, the roller coaster of this stock. There are the folks who are customers, perhaps, of the company. And then maybe there are the folks who are looking at the GLP-1s and looking for alternative ways to find this medicine. How did he get on your radar?
Yeah, so I mean, Hims, we've known about the company for a while because of their very splashy advertisements, which I feel like a lot of people have seen. I mean,
so it's not just us in the subways?
Right.
Like, it's not just New Yorkers?
Not just New Yorkers in the subway. I mean, sure, I talk about weight loss drugs a lot, so I do think I get targeted ads, but like most people I talk to have seen a Hims and Hers ad on Instagram or on Hulu. They advertise a lot. So people are familiar with the brand. They had this huge Super Bowl ad back in February about their weight loss drugs. And so it's been on people's radars. But I would say that the last year after Hims launched a compounded or copycat GLP-1 drug for a fraction of the price of what the companies Novo Nordisk and Eli Lilly sell their drugs for, it really put them on the map. I mean, their stock rose a ton in that time. They've experienced enormous growth. They're now worth $11 billion as of the last time I checked. And that is like really what got people talking about them the last year. They are sort of unafraid to be really loud and vocal in their marketing, sort of push the boundaries a little bit. They want people to be talking about their advertisements, be talking about what the company's doing. So that sort of like catapulted them, I think, into the conversation and obviously got them on my radar when they started offering these GLP-1 drugs.
How did they actually manage to offer drugs in such a competitive landscape? Would you say now that they're a direct competitor to these giant pharmaceutical companies that are also in on the GLP-1 space?
Yeah, no, that's a really good question because these telehealth companies, we did see pharmaceutical giants like Eli Lilly and Novo Nordisk start to see some of these telehealth companies like Hims as competitors because they were offering their drugs at a lower price point when Lilly and Novo were struggling with shortages and patients couldn't get the company's branded drugs. And then we saw these telehealth companies crop up offering copycat versions that were allowed during the shortages and really like start to steal market share from them. And then we saw Novo and Lilly, a few months ago start partnering with these companies and actually utilizing the platforms and the customer bases that they've built to get their drugs out there to more patients.
Wait, a partnership, but then at least the Novo Nordisk partnership with Hims, that kind of exploded.
Yeah, there's been so many twists and turns and ups and downs with this saga over the last few months. I mean, it was a surprise, I think, to a lot of people that Novo Nordisk, huge pharmaceutical company, would choose to partner with a telehealth company that was selling essentially copycat or knockoff versions of their brand name drugs for a fraction of the price alongside the real ones. And so it was sort of a surprise back then, but the Hims CEO was saying that the two companies were really culturally aligned and promising, that he saw a future for them even beyond weight loss. And then, less than 2 months after this partnership was announced, we saw Novo Nordisk terminate the deal, sort of accuse Hims of some sketchy behavior. And since then, there's just been this public back and forth between the two companies sort of playing out on social media and playing out in, the media, giving interviews to different outlets and sort of like going back and forth, accusing each other of different things. So it's like a really unique situation where we have these two companies duking it out like in a very public way.
You reported on this for months. You've said that you've been working on the story for a long time and spent quite a bit of time with Andrew Dudum, the founder of Hims. I'm wondering if you could talk a little bit just about kind of his style as a leader, as a founder, his background, and how that's helping Hims become like a legit competitor in this very high stakes weight loss drug race.
Yeah. I mean, so Hims, even though it's been around for a few years, I mean, the company started in 2017, went public in 2021, and Andrew's very young. He hasn't really stepped away from this like founder CEO role. He's still, very involved in sort of the day to day. He's the one that's coming up with new ideas for the company to pursue, bringing them up in, board meetings, things. And like, he is he is the one driving the company. And sometimes, we see CEOs like step back a little bit at this point, but he has 3 kids, 3 little kids. He's still very, very involved. His vision is sort of where the company goes. And he has this interesting background as well, going to Wharton, where it was sort of like a breeding ground for a lot of direct-to-consumer companies. And he wasn't at
like
school.
Warby Parker.
Yes,
they
Harry's
went there.
Razors, I think,
Okay.
too. Like, there's a few examples that we name in the story, and I don't think Andrew was at school with them, but we sort of see this type of company emerging from Wharton, which is interesting. And Andrew was involved in a lot of different startups. He was at a startup incubator before, going into HIMSS full time. So he has experience with launching companies, sort of knows what it takes to do that.
You've been in the weight loss beat for what, 2 years now? Mm-hmm. It's like what you live and breathe, essentially, when it comes to your reporting. And I think it's fair to say, based on what you've told us, this is more than a fad. It's more than just a trend. Mm-hmm. But it also is a huge money-making opportunity for a lot of different companies.
Yeah.
That said, this stuff changes very quickly. Mm-hmm. A company like Hims & Hers, as you detail in the piece, has pivoted over its history. What does it do now that is sort of on the outs with Novo? Mm-hmm. There isn't the shortage anymore, so they're not really allowed to compound anymore, right?
Well, so that's actually what they're betting on, is sort of that they will be able to keep compounding even though the shortage is over.
Why will they be able to do that?
So there is this, we'll call it a loophole. There's some argument over whether or not it's actually a loophole in the FDA legislation that says that these compounding pharmacies can continue to tailor make or personalize, customize these drugs for patients who can't take the versions that are commercially available from pharmaceutical companies. So essentially what Hims is doing is they're tweaking the dosages, the strengths of the drugs, and giving patients lower dose version, or titrating, stepping up the amount of drug that they're giving patients more slowly, sort of to mitigate the side effects that are quite common with these drugs, like nausea, vomiting. And so they're saying that, these patients are not they're not able to take the commercially available drugs because they have these side effects. And so they need these personalized versions. And by doing that, they're technically allowed to continue compounding. But the FDA hasn't really stepped in and ruled or said much about this yet. So, and we have a new FDA, commissioner now. So we're kind of waiting to see what happens. Can
you talk a little bit about how he's ingratiated himself in the company with the Trump administration and with RFK specifically?
Yeah. So Hims donated $1 million to Trump's inauguration fund back in January. And since then has been making, sort of broad appeals to the Trump administration, to RFK, to Marty Makary, who's the new FDA commissioner. Their Super Bowl ad was very much in line with some of the chief complaints that the MAHA movement has about the healthcare system being broken and pharmaceutical companies' incentives. And they've really tried to align themselves in some ways with RFK and with MAHA. But there's a fundamental difference in that MAHA really believes that, food and diet and exercise are sort of the ways should be the primary thing in the healthcare system that people are, promoting over pharmaceutical interventions, drugs. And, that's what Hims does, is they sell drugs. So at the end of the day, there's a little bit of a disconnect, I think.
I don't want to spoil the whole story, because I definitely want our listeners to go pick up a copy of Bloomberg Businessweek magazine and read your article. But you do start with this anecdote of the CEO creating this donut, this very extravagant donut shop. And I just have to ask, is this like a dentist opening up a candy store? Like, why does he have this donut shop? Or is he just an entrepreneur?
He's just an entrepreneur. And this is like, him and his wife wanted to create a space where their family and friends could come, where, in their community. It's like pretty close to where they live. And it's sort of a tribute to Andrew's grandparents as well, who were local. His grandfather was a local business owner in San Francisco as well. And so this was like sort of a passion project for them. But it is, if anyone's in San Francisco, they do have good donuts. They have very decadent donuts. So it's worth checking out.
You eat your donut and then you take your weight loss drug.
That's America for you.
Honestly, Elon Musk has posted about this.
Oh, really?
Yeah, he's posted about like eating donuts and GLP-1. So you're not far off, Emily.
Okay, all right.
People do it.
Wow, maybe I'm like just like Elon Musk.
Check out this story. Check out this story on the Bloomberg terminal and at Bloomberg.com. It's also in the upcoming new issue of Bloomberg Businessweek magazine. It's the August issue. Be sure to pick up a copy of that one when you see it at the newsstands.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
Well, TikTok, everybody. 10 minutes to go to the close of equity market trading today. Taking a look at how things are. Just got an update from Charlie Pellet. Worth repeating, the S&P 500 right now down about 0.2%. The NASDAQ is higher by 0.4%. The Dow down 0.8%. I want to bring in David George, senior research analyst at Baird. David joins us from Franklin, Tennessee. David, good to have you on with us. How are you?
Great. How are you? Good afternoon.
Good afternoon. Let's talk big picture here. We heard from the banks, 3 of the banks today. We'll hear from 3 more tomorrow. We're sort of at the beginning of earnings season. I think a lot of investors were expecting the last quarter to be pretty bumpy when it came to the outlook for tariffs. We didn't necessarily see that start to seep in. To what extent right now do you think the market is pricing in tariff risk?
You know, that's a great question. I think relatively low. I think that there's a lot of complacency, and this is more of a market comment from my perspective rather than the banks. But I think there's a lot of complacency around tariffs that the ultimate rates that are being discussed in some of these letters that have gone out over the last few days are going to be something on the order kind of in aggregate, Tim, around the 15% area. So we'll see, to use the president's term, we'll see what happens. But as it relates to bank earnings, it's not something that we've really seen have much of an impact. I think in the last couple of months, we've seen a pickup in loan demand. And I think part of that stems from anticipatory buying of inventory. So that has resulted in line of credit utilization picking up to some degree. So there's been some impact there, but we certainly haven't seen any of the negatives as it relates to potential impact on corporate profit margins and so forth. And that's something that will take, if it is indeed an issue, something that will take some time to occur.
Have we seen any positives? And what I mean by that is sometimes, when bank earnings roll around, you often hear people say that market volatility is actually good for banks. The traders, pull in more revenue because they're just simply trading more. Did we see that in this current quarter, that all of the market volatility that had to do with tariffs, did it help banks at all?
Yeah, at the beginning of the quarter, it did, Emily. The volatility in currencies, commodities, and markets broadly throughout the month of April and in the beginning of May helped derivatives trading, equity trading during the beginning of the quarter. And then as volatility calmed down, we kind of saw the baton being handed off from vol-related activity to capital raising activity, M&A. So we saw a number of IPOs and secondary offerings throughout the tail end of the quarter, as well as a pickup in M&A. And the momentum of late seems to be more on that end rather than volatility-related activity.
I do want to make a note that the president is right now making comments at the Pennsylvania Energy and Innovation Summit in Pittsburgh. He made some comments about investments from tech companies. You can check out LiveGo. He's attending the Pennsylvania Energy and Innovation event. You can watch and see his comments on LiveGo.
David, I want to ask you specifically about earnings here from JP Morgan, because you downgraded JPM to an underperform. You said the risk reward is getting unattractive. Talk a little bit more about that stock rating, that stock call that you made.
Yeah, the stock call really is just a call on the stock itself. Many times the fundamentals of a company and the stock aren't necessarily one and the same, and I think that's true in this case. We have the utmost respect for JP Morgan. It's probably the best company that I cover. Fundamentally, I just believe that, and we believe that the market has priced it that way. JP Morgan trades at over 15 times earnings. It trades at close to 3 times tangible book. If you were to look on your Bloomberg terminal and run a historical valuation analysis on JP Morgan, it would suggest that it's never been more expensive. And the market is pricing in, we think, a permanent improvement in profitability relative to the rest of the industry. And banking to us is a commodity, and as great as JP Morgan is, we're of the view that the excess returns that they've been able to generate are going to be a little bit more normal going forward. And we simply think that the upside is fairly limited. So we're paid to have an opinion, and we think that investors should sell the stock.
Okay, well, let's talk a little bit about tomorrow and Bank of America. You upgraded Bank of America in April. What should investors be on the lookout for now, and why are you bullish on the company?
Yeah, so we actually downgraded B of A to neutral the same day we cut JP Morgan to a sell, but that stock was up over 30% in just that couple month period of time. I think B of A's quarter tomorrow is going to be relatively good. I think expectations around that stock are not nearly as high as perhaps Wells Fargo today, as well as JP Morgan. So B of A should benefit from all of the things that we've talked about as it relates to volatility related activity in the capital markets. And then obviously Merrill Lynch benefits from asset prices being elevated. So we think Merrill's going to have a pretty good quarter, and the bank is performing well at the same time. And the stock has lagged peers. So we think expectations are low, and we feel okay about B of A going into tomorrow. I think that the numbers are going to be good.
We have an interview with Brian Moynihan tomorrow afternoon in the 2:00 hour, so I encourage everybody to check that out. David Weston will be doing that interview with Bank of America's Brian Moynihan. Okay, so you talked about JP Morgan, you talked a little bit about Bank of America. If you think about the broader group of banks, and the banks as a broader group, are you thinking that what are you thinking about in the context of this rate environment? Because nobody can really make sense of the rate environment right now. You hear one thing from the White House, you hear a completely different thing from the Federal Reserve. What's your view?
Yeah, I think the answer is somewhere in the middle, like most things in life. I think it's reasonable to expect that the tariff impact is likely to be, I'm reluctant to use the word transitory, but is likely to not have a longer term impact on inflation expectations. So I think it's reasonable to expect it. And the curve is pricing this in even after today, around 50 to 75 basis points of cuts by the end of calendar 2025. If the long end stays where it is, which we think it's going to be in that 425 to 450 range for the foreseeable future, that's actually a pretty good environment for banks. If you go back the last 3 or 4 years, we've had a very flat, if not inverted, yield curve for some time, and that has had a negative impact on the profitability of banks, particularly the regional banks. So to the extent we can get a sustained positive shaped curve, we think that's going to actually have pretty positive implications for most banks going forward.
David, thanks so much for chatting with us this afternoon, talking all things banks. We got to get you back on soon. David George is a senior research analyst over at Baird.
This is the Bloomberg Businessweek Daily podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.